Welcome to the Rapaport Market Comment. This video is brought to you by RapNet, the world's largest and most trusted diamond trading network.
Last week, Anglo American released its production report for De Beers for the fourth quarter, outlining the volume of diamonds the miner extracted and sold during those 3 months, as well as during 2023 as a whole. The main details we've already published on Rapaport.com, so I want to pick out a few other important points that De Beers revealed. First, on prices. De Beers' rough price index for the year fell 6% compared with 2022. That's an average of rough diamond prices for the whole of 2023, compared with an average for the whole of 2022. For the second half of the year, prices fell 9% compared with the first half of the year. That's also an average for the periods. Remember, the rough and polished diamond markets were very weak in the second half of the year because of difficult economic conditions in the US and China, and competition for lab-grown diamonds. But some of you might ask, I thought De Beers didn't reduce prices much during the market crisis. That is true. According to our sources, the last significant price drops the company made were at the July site. The 9% drop reflects that reduction, but it also reflects the price reductions it made in June, right at the end of the first half. Given that we are talking about averages, that reduction had more impact on the overall average for the second half than for the first half, as for most of the first half, prices were at higher levels. Second, on a related point, Anglo American, De Beers' parent company, said that it expected to incur a charge for the second half of 2023 because of inventory adjustment at De Beers. This means that the devaluation of De Beers' inventory will have a negative effect on Anglo American's profit. It currently estimates this devaluation to be $100 million, reflecting the decrease in rough diamond prices. This brings us to the third point. Anglo American said it was currently assessing the carrying value of De Beers, which is essentially an estimate of how much the business is worth. The owner said that while there had been some improvement in the market, the prospects for economic growth in many major economies were uncertain, and it might take some time for rough diamond demand to fully recover. De Beers seems to be taking a highly cautious approach to the market at the start of the year. It also said it would assess options to reduce diamond production in 2024 in response to market conditions. For now, it's keeping its production plan unchanged. But will things get worse? Let us know what you think.
If you like this video, please subscribe to get every new one we make on a weekly basis discussing trends and analysis in the diamond industry. Thanks for watching and enjoy the rest of the week.